Do you make New Year's resolutions? And the more interesting question is, if you do, have you kept any of them yet? As a rule, I don't. But for this investing journey, I've decided to set a year-end goal of $20,000, which should be doable since this past year I was able to save $10,000. So this year should be a breeze. But to help me get there, what I decided to do was to basically set some smaller resolutions, some goals that will just set me on the right trajectory to hit that target. Hey, welcome to the channel. I hope you and your investments are doing well. My name is Steve and I am a dividend stock investor, and I put $150 every week into my tax-free savings account using Wealthsimple Trade. Now let's talk about the first resolution that I have. The first resolution that I have is to increase the amount of renewable energy companies in my portfolio so it is up to a total of 25%. And one of the companies that I'm going to invest more into this year to help me achieve that goal is Interject Renewable Energy, ticker symbol INE. This was one of two renewable energy companies I added to my portfolio early on because I, from the get-go, from the beginning, have felt very, very strongly about supporting this industry. That is actually, in fact, one of the reasons why I got into investing last year. I was looking up to see if there was any kind of green bond programs through the provincial or federal government, but there wasn't. So all of a sudden I started looking at these exchange traded funds, and then all of a sudden Wealthsimple Trade and how it's a zero commission platform, and how I could pick individual companies and dividends and all these things that just kind of explode into what you see today. And one of those companies is, Interject Renewable Energy. Since my initial investment in Interject Renewables, the stock price has been on a decline. It seems that the renewable energy bubble has deflated quite a bit. Just last week, Interject actually hit their 52-week low. But I will point out that they're not alone. When you look at other renewable energy companies like Boralex, TransAtlanta Renewables, they're all following that same trajectory. They were all part of that same bubble that has deflated. Now, when you look at the revenue of Interject, it has been increasing year after year. But of course, we're also interested in the profitability of the company and their net income, which has not been following that same trend. It's been up and down. And I did not do a deep dive into their books. That's why this is not financial advice, and you should always do your own research. But my understanding is that there were some debts that they had to pay off and some acquisitions, so that would definitely affect their bottom line. The net income and the profits will come. Just as growth in this sector continues to grow year after year, so will the profits. In fact, 82% of all new electrical capacity worldwide was from renewables in 2020. So it's information like that that makes me fully committed to this company, which is why I just recently bought 8 additional shares into Interject, which has dropped my average buying price by 40 cents, which that's great. I missed out on dividends this month because their ex-dividend date was December 30th, so I'm gonna have to wait till April to see the next dividend payment, which should be a nice increase of $1.44 over the $7 or $7, $8 I'm receiving right now. And speaking of dividends, the other resolution that I have for 2022 is to actually try and grow those dividends faster. So the previous example is I kind of missed the ex-dividend date. Now I'm going to try and use that as a tool to grow the dividends faster. So if I purchase the stocks closer to that ex-dividend date, I should be receiving those dividends sooner, and therefore reinvest them that much faster. Another aspect of wanting to grow the dividends faster, because again, this tax-free savings account is all about dividend growth in quality companies. I am going to not put more money into companies that pay a dividend less than 3%. Unfortunately, my Vanguard ETF that tracks the S&P 500, VFB, doesn't make the cut. It currently has a dividend yield of 1%, and it just doesn't bring in enough money for me. Not to get greedy, but I want my money to work faster and smarter for me, so I will not be putting any more money into VFB. So I'm going to park that stock. It doesn't hurt me to keep it there, but no more money is going into it. And I'll just let that one ride, and it will grow. It's a growth stock. It's more than it is a dividend stock. So I'll just leave it alone, and we'll let that one just grow. Now, a good example of a dividend stock that I want to put more money into would be BCE, Bell Canada. They have a dividend rate currently of 5.24%, I believe. As well, they have a 12-year record of increasing their dividends. So this one is a win-win. Plus, it's Bell Canada. This is a staple, a solid company in Canada. It has consistent revenue and net income year over year. So this is a company that you can safely and easily park money into. Again, that is not financial advice, but it's definitely a stock that you want to take a look at and do a little more research and see if it fits right with your portfolio and is right with your strategy. Another 2022 resolution that I have for my investing journey is just this. This YouTube channel. I want to keep growing this channel. I enjoy making this content. It forces me to learn more about these companies, learn more about investing skills, which I am honored to then pass on to you, anything I learn. So I want to just right now thank everybody who has watched any of my previous videos, everybody who gave it a thumbs up. Thank you so much. Heartfelt thank you to all the people who've subscribed. I couldn't do this without you, so that honestly means the world. When you hit that like button, it's cheap, it's easy, free. Come on, just thank you. The feedback you provide me via the comments, which please keep coming. Help me know what kind of content to create next. Should I be talking about my portfolio more? Should I do more live buys? Should I share more about myself? Should I talk about more individual companies? You know, I use the example here of Chorus Entertainment, which I highly recommend you check out this video. Chorus just announced a 10% increase of their quarterly revenue, which has gotten investors really excited, which has seen the stock price grow by almost 10% as well in the last week. So check it out. Great video. I just re-watched it. All the things I saw, of course, back then are still holding true. So there it is. Thank you for watching this video, and keep it in the green, and we'll see you in the next one. Take care, guys.